What's up, guys? For today's video, I'm gonna go over how I select a strike price, how I make triggers, what time frames I use for triggers as well as execution, go over my strategy on market open as opposed to later in the day towards that power hour, 3 to 4 o'clock Eastern Standard Time, go over a little bit on contract sizing and premiums and IV, as there has been a ton of volatility in this market of late, and then finally an announcement more on the collaboration between myself and Adam Silver. One of the reasons that I like watch lists and believe so heavily in watch lists is because I believe in being fully prepared for a trade. Because when I'm not prepared, honestly, I feel like I'm going to trade absolutely terrible. So that's one thing I like a lot. But when it comes to my process on being ready for a trade, some of the things I want to know are: what strike am I going to take? I'll go over that here in a second. What are the triggers, and then what are my price targets over or under my call or put trigger? So when it comes to selecting a strike price, I'm going to start here with unusual whales. This is intraday analysis of NEO. And what I'm looking for when it comes to selecting a strike price is on Monday through Wednesday, I will play usually 1 to 2 OTM on both sides. And the reason being, I don't want to go too crazy out of the money, but I also don't want to be too close to the money where the premiums are higher, and I can also still make money if I'm a little bit further out on the OTM. So I'll use that Monday through Wednesday. Thursdays and Fridays I'll stick to about at the money or maybe 1 OTM, just because we don't have time on our side. Data can kill us. Even if it does end up hitting us later in the day, hitting our contract strike price, it can still cause us to stop out earlier just because time's not on our side, right? So that's one thing as well. When it comes to how I actually go over and select a strike price, I do this the night before the day of the trade, and what I'm looking for is these high volume contracts that aren't too crazy out of the money, and see where people are hitting them. But I also want to couple that with my key levels so I know that it's a reasonable price to select on the contracts. So in this case, next week is the 11th. So I noticed, the 25 calls are getting hit heavy. So I'm going to keep that in mind. NEO finished at 23.97. This isn't too crazy out of the money. We also know that 26 calls are also getting hit. So I'll keep that in mind as well. But on the downside, we finished at 23.97 for 211, 23 puts leading the way. And then we do have those 218, 22 puts. So 22 puts could be in play as well. So that's how I use flow. And I really use the flow to look at where's the volume, right? Because we need volume in order to get in and out of contracts, in order for some good liquidity when we are day trading. So that's how I really use flow. And then I'm going to couple that with key levels. This is NEO. In terms of time frame, I stick on the hourly and the 15 for creating key levels. I use the daily for the ATR method, which is how much daily range do we have. It looks like here about $1.50 on NEO. So I like that a lot. Another thing I noticed here with NEO is we're on this little volume node with not much in either direction, a little bit heavier to the upside, but we do have a gap above. So I do like that play on NEO a lot right now, just looking at it. But first I'm gonna break this down on the hourly. So what I'm looking for is inflection points. Points have been hit multiple times, and these are gonna be my trigger levels. In this case, whatever this level 24.3 has been hit multiple times. So I like that a lot for a call trigger here on NEO. And I'm going to start on the hourly, look at levels, and then I can further break these down and really make sure and break down the levels a lot on the 15 to see the exact levels a little bit more clear. On the downside, it looks like 23.57, 23.58. In terms of the downside, it looks like 23.57 is a big level. 23.58, 23.54, 23.5, definitely a big level. So I'm just going to throw this down here at 23.58. And then I'm going to break this down further on the downside to really look. So right now, just looking at this and interpreting that flow to select strike price, I know over 24.3, we do have range. It looks like up to 26 easy if we can get over 25. So in this case, I'm going to play that 25 call over 24.3 because there is a lot of congestion over that level. I was just looking at this. Looks like 24.50. 51, 52 looks like a big level. Cool. And then over that, there's some, massive levels. Looks like, what's the high here? 24.85, 24.84, and then over that 25 is definitely a big level. So, there's 3 levels this sucker has to pass in order to get up to our 25 level. So I'm going to play that, manage my risk a little bit better, and I don't have to go too crazy OTM where the money, isn't going to move as fast. But on the downside, it looks like, the big levels down here about 23.10. It's acted as both support and resistance, tested multiple times. So I'm going to throw that in. On the downside, I'm definitely going to play those 23 puts. I think 22 puts definitely could get hit if we have a pretty weak day in the market, but I'm going to use the 23s just because, it's 48 cents. It's 48 cents from our trigger level out. So I'm just going to, use that level, not get too greedy and not expect that home run type play. That's how I really go through and use them. Break this down here on the 15 to look, more into levels. So that 24.3, definitely a big level. I like that a lot on the call side. The put level, a lot of congestion here and there. It looks like 23.55 is going to be a big level as well. I'm going to move this down to 23.55. I just think there's a little bit of chop, so I'm going to wait until I get a little bit under that level before playing puts. It's also right underneath this level here. So 23.57 is definitely a big level as well. But I'm going to wait for that. So that's how I usually go about selecting a strike price, is using key levels, that unusual whales flow, and then the day of the week, Monday through Wednesday, 1 to 2 out of the money. Thursday, Friday, settle more for at the money or 1 OTM, just because, we don't have time on our side. For this next part, the question's been asked, how do you go about handling the volatility that happens early in the morning, and kind of what my strategy is on early morning as opposed to later in the day. I'm going to use PayPal here as an example, and my answer to that is earlier in the day, I really use the key levels the most. And I want to see, how we react to those key levels. A close below, I'm perfectly fine paying puts. Close above, cool, I can play that as well. When it comes to right off the open, usually I sit out the first 10 to 15 minutes. And the reason being, those premiums are absolutely juiced off the beginning, and the IV is absolutely crazy. So they're jumping all around here and there, and I don't feel like I can get that great of a strike price. So in this case, I'm going to wait on those key levels, especially those first 15, 20 minutes, right? And then throughout the day, I'm going to use more of patterns to trade coupled with our key levels and see what kind of intraday patterns we have. One thing that I also like to keep in mind when trading those first couple, 15 or so minutes is, what is this ticker doing on the daily? What kind of trend is it in? In this case, PayPal, very beaten down. So I'm going to expect, test that support level, that trigger, and see how it reacts there. If it holds that level and can bounce, cool. I want to know where this is at on the daily. Are we at a very crucial spot, for support, or are we at a possible breakout spot? In this case, this would be a very, very key level for support here on PayPal, as it's been taking an absolute beating after that terrible earnings, big gap down. So that's one thing to keep in mind. Now, when it comes to the actual day of the trade, I always stay on the 5-minute, execute on the 5-minute. So in this case, PayPal gaps down off open, doesn't close below our level. So I'm not going to play that. We get a second level here, closes below that 123, 129.3 put level, and then it just tanks throughout the day. So in that case, probably not going to enter there, just because it is within that 15 minutes, and I don't have a near perfect retest on that level, but that's okay. In this case, for the mornings, I like to see how it reacts to this level. If I get retests of our put level and it closes above with long lower wicks, I will enter calls off of a fail put trigger. It's one of my favorite ways to play that, and I really use that more in the morning as it reacts to our levels. On the flip side, if we test, say this was our call trigger, we test this and can't hold it, and we start falling through, I like long upper wicks with closes below our level as well to enter puts on failed call triggers. I think the best way for me to possibly try and explain, my early morning strategy versus later in the day when these trends have set up intraday is just, breakdown of a play, right? So this was DraftKings. It was on my Thursday watch list, and my call level was 22.3, put level at 21.4. This is the opening candle here on DraftKings. As we notice, high volume, long lower wick, and it closes above our 23.4 level. I don't usually play tickers within the first 10-15 minutes, so I didn't play it there. But we did test that 21.3 level, and we have a nice double test of that 21.3, and we can't hold it. So very good spot to enter into puts here earlier in the day, right? These get down, start making some moves pretty fast. Eventually test down that 21.4 level again. Awesome. So I can play that there, right? Now, once we start getting further in the day, notice that this trend line, just draw a little trend line here. We have this steady downtrend all day. Cool. So I'm very confident with puts. The one area that I really watched was that 21.4 level, as it was defended multiple times. So I didn't want to take anything intraday around that 21.4 level until we broke above or below the level, and towards, let's see, 11:40 we finally get a close below that level after testing it multiple times, forming lower highs. So I'm very confident in that play there, and I'm just going to let it ride this 9 EMA, and it's also below my trend line and VWAP, so I'm pretty confident in this play, right? As we notice, it starts to try and break here, but ends out failing throughout the day. So that's one way there where how I use trend lines intraday. I'll also go over example of SPY, but when it comes later in the day towards that 3 to 4 area, we do have a nice intraday trend set up, so I can use patterns that I know and am familiar with to really help with confidence and where to enter into place. Some of my favorite are descending wedges, ascending wedges, flags, bull flags, bear flags. But my most favorite to play is definitely the double top, double bottom off of key levels. In this case, we had multiple bottoms here before finally breaking through. You could have taken some quick scalps in here, but we didn't really get too far over VWAP throughout the day. So that's cool to see. I'll use SPY again. SPY, I'll use this on Friday. So as we see here, it's testing levels down here, and then we start to build in this little base. About 10:30, we're chopping around. 11 o'clock, start to base a little before exploding. I always scale out on bases, especially if I'm in puts here. I'm scaling there because it's basing a lot of different times. There's still buyers stepping in pretty heavy, some long lower wick candles. So I'm gonna wait for some sort of move before entering into a position. As we notice, this is the opening candle here on SPY. Don't want to play that. But once we get this move here, we have nice intraday support along this 9 EMA. As you can see, I use this little bull flag here to get a quick scalp on SPY. But I really like the use of patterns intraday once we have established a trend. One thing I've noticed, trends don't usually start to establish until 11 or maybe 12 o'clock, and oftentimes with SPY the trend flips about that 12 o'clock 12:30 Eastern time area. So that's one thing that I've been able to keep in mind when trading as well. Another thing, when we see here, we did get this consolidation on the 9 EMA, got a little bit more of a push up towards that 450.8 level, and then we broke through. But up here, same thing. Finally get a bearish engulfing, and then we start to test those levels, but we can't ever break past them. So that's a very low risk add spot for puts. And when looking at areas like that, where it's consolidating right up near a line, but it can't break through, this is a very good spot to add puts because the risk is very low. We can enter into these puts up when it's testing this, let's see, about 452.5 level, and put our stop loss at whatever the high is, up in here, the high about 452.63, or that 10% hard stop, whatever comes first. And that's a really good spot. Inversely true for calls. Same thing can be seen down here. SPY tends to follow support resistance better, those patterns better. So that's one thing that's cool with SPY and with intraday setups. When it comes to contract sizing, my general rule is never go over that 10%. And oftentimes I stay at 5% of my entire account value when I enter into a play. And the reason being, I don't want one play to make or break my entire account. And I know this can be definitely difficult with smaller accounts, you know, the $200, maybe even $300 accounts, because often the premiums, especially earlier in the week, are way more than 10% of our account, right? So that's one thing that, you know, we got to take into consideration. But when I was trying to build up my smaller account, I would always try to shoot for that 25 to 35% of my account for contract sizing. And that's how I really started to believe in really learning 3 to 5 tickers, because I knew that I could trade these tickers any day, right? I knew that I could afford them. I knew they're in that 25 to 35% of my entire capital on my account, and I knew, you know, their personalities. So I really like that. But when it comes to sizing, if I'm trading really bad, to this day, I will only enter with one contract. I do this to try to build up some confidence, right? You know, start seeing that green, take the profits. I might scale a little bit earlier if I've been trading really bad, but most of the time, I'm just going to scale that one contract. If I do have one contract, I don't want to get greedy, even more than if I have more contracts, right? And the reason being, you know, we want to take that green, right? What green does to our mental state, our mental personality, you know, everything mental with seeing green versus red, it's huge overall. So I like that when it comes to just one contract, you know, focus on building up those gains. You might not get the 20% all the time. You might get stopped out, but green is green. You're not going to go broke taking profits, right? It might take longer to add up over time. You might not get as many home runs, but oftentimes I find when I do get those big 50 to 100% gains, it's when I'm not expecting it. It's when I'm not going for those big gains. It's when I follow my system. You know, I'm scaling out. I have proper risk management, and it's something a little bit less expected than the, you know, the 20% where I'm expecting something bigger, but I get stopped out at 20%, and then it ends up falling all the way down. You know, would have been negative, but I had good risk management, scaled out nice, protected my profits. When it comes to premiums and how they move and what, you know, IV is, all IV is the underlying premium and how it moves in accordance to price action. So one thing that I try to keep in mind is playing lower IV names from underneath 75 is usually what I tend or try to look at. But, you know, of recent, VIX has been running a little bit. So these IVs are 100% plus in some cases. And what IV does is it changes how fast a premium moves. So really high IV names like the smaller caps or tickers that have earnings on the week or coming up, they tend to have higher IVs, so their premiums are going to move very fast. This can be a good and a bad thing, but most of the time I'm looking for that 75% or under when I'm going in to play plays, and that's just because I don't want these premiums to move super fast when price really isn't moving all that much at all. So that's one thing to keep in mind as well. Some things that, you know, spike IV are low volume contracts that have been pumped somewhere. You see these Twitter alerts, and oftentimes they're very OTM. Most of the time when those do work out, they are IV pumps. They dump them, and then a lot of people get left with all of the excess losses. And that's you know, unfortunate for sure. But looking at the IV before entering into play is definitely nice. Knowing when earnings are, know when these IV spikes might come into play, and they all run off of VIX and the volatility that is in the market. Now it's the time, you know, I've been waiting for a little bit, and it's the announcement of the collaboration that Adam Silver and I have been working on, and that is we are going to release a podcast here soon. He's going to tweet out a very more in-depth announcement of the podcast, but basically what we want to do is, you know, push options EDU, right? But also realizing that there's more to life than options. There's a lifestyle. So we want to push a lifestyle as well, but focus on options EDU. One thing I will always strive for is, you know, small accounts and keeping it real with y'all. I don't like to put out my gains, anything like that, simply because, you know, I think it's it's not about me, right? It's about helping. If I can help one person who's struggling with something, or maybe they're on the verge of that success, on the verge of quitting, and they're able to find that out maybe because of a video, something like that. That's what I strive for. That's what Commish and I are going to strive for through these podcasts. We plan on doing them every Sunday, starting here very soon. As I say, Commish is going to put out a more detailed tweet with some more details and specifics, but we are starting a podcast. It'll be called Not Financial Advisors. So it's coming soon to Apple, Spotify, anywhere you can find a podcast. It will be there soon. Co-hosted by myself and Adam Sliver Trades, aka Commish.